So in this presentation, I am going to describe one of the best option strategy which you can initiate for the Bank Nifty. Keeping in view of this election outcome. So here, whenever there is any such kind of domestic event happens, like your state election outcomes or review related to the central bank and other things. So those are the very local events, but it used to give little bit of uneasiness in the market initial time, and then after it used to get settled. So there are two probabilities of this kind of events. The first probability will be either market should consolidate, or it can show some wide price movement. So that wide price movement based on that event's outcome, if the event's outcome as per the market anticipation, then you may see some upward movement. If the event outcome is below the market expectation, we may also see some amount of downward price movement in the market. So Bank Nifty, as all of you have experienced in recent days, the future has almost corrected from 26,000. So future index of Bank Nifty, if I take this 28th December price points, it has already corrected a lot. Near to 1000 point correction has already achieved here, and we are at 25,075 level. And in this particular scenario, which kind of strategy we should initiate, so that based on the event's outcome we should be benefited from. So this is a great chance for the option traders to make money in this kind of situation. However, you have to play very wisely in this kind of situation. So I am just going to give you one example here. Here we have, as I told you, one is conservative expectation. So conservative expectation, another is our bullish or bearish trend expectation. So if that trend is if that anticipation of that event is favorable, then the trend expectation will be in the upward direction. If the trend is not favorable, then the outcome of that event is not favorable, then we will be having a downward price acceleration. So keeping in view of all these things, I am just giving you the strategy which I have already recommended last month. So we can form very good combinations, and these combinations should be taken together so that we should be get profitable. And this particular strategy, if you initiate, if irrespective of your event's outcome, if the market reacts widely post-event, the Bank Nifty reacts widely, and there is a further fall of 500 to 700 point, or there is a again bounce back to that same 26,000 level, then you can earn very good money. So around 20 to 25,000 profitability we can expect. But the liability, I can fix it around 3 to 5,000 rupees liability it can give in this. However, this strategy will take a great amount of your margin. So margin requirement around 2 lakhs plus it will be taking for initiating this particular strategy. However, it is a very protective strategy, having some only 2% of risk of your capital. However, you have a chance to earn near about some 10% from this capital. So 2 is to 10, if you can take 1 is to 5 risk reward ratio, great strategy you can form. So here, what is my strategy? Before that, I'll just do a small trend analysis of the Bank Nifty. I'm just going for the coming 10 days. Today is 7th, so 17th or till 20th I can expect this strategy. I have just taken a positional 10 days view. So here this has taken, so this strategy once we are taking, I have just taken a review of this trend analysis. The 10 days trend says that 25,250 above, if it makes, then it has all probability to hit 25,850. Second cycle also starts at 25,562. Same way, if it is breaking 24,879 or 80 level, you have all probability to hit 24,279. Or the second cycle also bringing it to below 24,000. So this is a great move we are expecting in this. And if the situation or the event's outcome will be positive, we can also expect 26,000 plus in this. So based on this particular trend view, I have just filtered strikes 25,500 call and 24,500 put. This is based on the trend expectation. So we are just initiating a simple strategy here. What we are doing here, the same short strangle and long straddle or long strangle and short straddle strategy we are going to follow. So in the month of December, 28th expiry, monthly expiry of December, 25,500 call option I am buying, and I am selling 25,500 call option of 25th January expiry, monthly Bank Nifty contract. So both are liquid contracts, 25,500 call option and put option, if you can see here. So 169 rupees and 350 rupees we can get it. So I can just put it here, 350 we can sell. So 169 or 170 rupees we can buy. So if I can go for, this is the two lots I am making. So 2 multiplied with this one, and here I am just a 350 level, I am just selling one lot. So almost my capital, I have just 350 rupees worth of premium I have received, 340 worth of premium I have given in two lots. Same way if I am going for 24,500 put, so 24,500 put, 174 for December, January it is 284 quotes, 309, so almost in 300 you can get it. So 300, 297, 300 it is coming. So definitely you can get it in 300 level to sell. So 172 rupees if you can buy in two lots. So two lots into 172. So same way you can also 300 rupees you can sell one lot. So by this process your net premium involvement in this particular strategy formation for trend expectation strategy formation will be 34 points multiplied with 40, so 1360. Not much money you have paid to the market. However, margin requirement will be there, maybe 90 to 95,000 or 1 lakh it will be there. Then we will be going for a conservative strategy wherein I will be just taking the same strike, the call option of December 28th expiry I have taken. So I am just taking the same call option strike. So but put option I am taking different. But this strategy will be different. So we will be aiming from the consolidation market. If the market consolidates between 24,700 to 25,500, we can make some money. So with that expectation, this strategy we are forming. 21st December expiry contract, nearest strike 25,200 strike I am selling. Why I am selling that? Because my uptrend starts at 25,250. And same way here my downtrend starts at 24,879 or 950 level. So I am just going for 25,000 strike. Because that 900 strike liquidity may not be there for 21st December. So I am selling this one December 21st expiry, 25,200 call option, which is you can say 195 quote, 234 bid, around the 200 level you can sell it off. 25,200 call option, you can sell it at 200 odd. So I am just taking 200 rupees, you are selling this one, and 25,500 call option you can 175 level you can buy. So you are getting a credit of 25 rupees. So same way I will be going for 25,000 put option of 21st December expiry, 73, 273 and 284 bid and offer. So same way we also require the option index Bank Nifty 28th December's Bank Nifty we required 24,700 put option which is at 290, and you can say 25,000 put option is 273, 280 range it is 66, 67 to 270. You can say I'm just selling this one at 267 and buying at 220. So here I am selling this option of 25,000 put at 270, 270, 267 bid, 2 to 3 rupees. If I can put more, definitely it will go. And here I am buying it at 24,700 put of 28th December expiry at 221 rupees. So 221 rupees I am just 221 rupees I am buying it. So this is 270 and 221. So by this process also I have received some credit. So this is minus. So I am buying. So this is also minus. I am buying. So by this process also I have received some credit. If I can sum it up, some 74 rupees credit I am getting. So this 74 into 40. So I have received 2,900 credit. And here I have just given a debit of some 1,300. So money terms, my investment in forming this strategy is almost zero. Rather, I got some 1,600 credit. So if the Bank Nifty move in the band of 25,500 to 24,700, 24,700. So this is cross calendar we have taken. So weekly contract with the monthly contract we have formed in the December. If this conservative strategy what we have taken, consolidation strategy or conservative strategy what we have taken, if the Bank Nifty move between 24,700 to 25,500 in this zone, at least for 1 week or till 21st of December, your profitability will be 6 to 7,000 rupees you can get from it. If in case it is moving above 25,500 or falling below 24,700, we have already the trend expectation strategy, which will start yielding you profit. So here, one small losses will be there. It may be very small amount, it will be maybe in the thousands. However, the profit accumulations will come in this particular strategy. So if it is slipping below 24,500, but you have, if it is Nifty, Bank Nifty is falling below 24,500, just close this particular strategy and hold the remaining strategy, this one. So the net result is post election result declared. Once the trend is set or once the trend will be giving you a clear conditions or breakout, whatever we are expecting as per the 1SD trend cycle. Say in the uptrend second cycle we are getting, so we are getting around 25,800 or 26,000 nearing, or in the downtrend breakout we are getting below 24,300 or going to 24,000 level. In that case, we will be booking the profit here in the trend expected strategy. In case that is consolidating as per this band of 25,500 to 24,700, no need to worry. Just book the profit here and hold this particular strategy. Hold this strategy. If it is giving you a conclusive breakout above 25,500 or if it is giving you a conclusive breakdown below 24,500, in that case this conservative strategy you have to book a small loss and come out. In that case it won't be a very huge loss here, it will be a very small loss. However, just book the loss here and hold this particular strategy because it has given a conclusive breakout. It has to move, and once it is moving, so small loss you can take and hold this particular strategy, and once it is giving you a breakout or once it is achieving a second cycle's target around 26,000 or 24,100, book the profit in this strategy and hold. However, I have already told you this particular strategy having a liability of maximum 4 to 5,000 rupees liability it will be having. At the same time, it has a great, in case there is a move beyond 25,800, or in case there is a fall below 24,200, in these two cases your profitability will be great. It will be 15 to 20,000 rupees we can expect. So 15 to 20,000 rupees we can expect. However, it will take a great amount of margin. So margin around 2 lakhs or 2.25 lakhs it may require the margin to initiate. However, you don't have a fund requirement almost we are nullifying. And this is also Vega neutral. If you calculate all the Vega of this particular option strategies and make it, it is Vega neutral strategy and very successful in the very successful in the event expected market. So event expected market. So if you are visiting this Smart Finance website, our Smart Finance website, every week we used to give you some useful strategy based on the situation, based on the condition, based on specific parameters. So many times we have given many such strategies, and many to recall few things I have also told you on the put call ratio, how to work on the Nifty in the put call ratio. Many people will be experiencing that in most of my videos, earlier videos, I have most of the times I have advocated the put call ratio, how you can take. So in the put call ratio part, I have most of the time I have told if the put number of put contracts divided by the number of call contracts. So this is 5 crores divided by 6 crores if you put it. Whatever put call ratio is coming, the put call ratio between 0.95 to 1.05. This is a consolidation zone. Below 0.85, it is a bearish zone. Above 1.16, it is a bullish zone. So put call ratio, these things, if you just compare from the day this market's correction has started, from that day to till date, and take this put call ratio and compare, you will understand that fact that whatever I have said on the put call observation, it is true to the market. So this is a very important point you need to understand. Also, I have told how to identify those range bound markets. So there are many procedures I have given, very small observations how to identify a range bound market. If you just visit to the YouTube channel, how you can form this range bound market strategy, here also I have given one video. I have just outlined key principle of finding the range bound market. In your free time, you just go through that and follow that principle, so you can able to understand the range bound market. And certain markets are there wherein the event is going to trigger a movement and that event is not known to anyone. Say RBI reviews, say federal reviews, say election outcome. So all these things we do not know what is the outcome. In that situation, we may experience a consolidation post the event, or we may expect a wide price movement post the event. So in that case, if you just club these two strategies, for one for consolidation market and one for the trend expectation market, with a proper risk assessment, with proper Vega management, if you can just initiate this kind of strategy, you will be well protected. Same time also you have a chances to earn good amount of profit in this particular trade. So if the first part of the trade gives you profit at 7,000 or 8,000 rupees, do not come out from the second part of the trade. Hold for the event to over. Once the post event there is a trend breakout happens, you can make some profit and come out. If post event there is absolute no movement, there is no absolute trend breakout happens beyond the second cycle price point, what I have expressed here, then do not hold this particular second component of your strategy, come out of that. So this is the strategy. If you can initiate, you will be well protected. And once if you are experiencing this video in the YouTube, do subscribe to this channel. By subscribing to this channel, whenever we upload any video, you will be informed. If you like this video, give a like in this video. So these videos, if you like this video and if you think it is a useful stock, then definitely give a like here. And share this video with your friends. If you want to share this video, share this with your friends. only the definite method of trend forecast and the proper planning can give you success in the market. There is no shortcut to get the success in the market. You must, for that, you need to educate yourself. We have great academic stuff for option trading, for intraday trading. If you think and you can possess all these things at a cost of 17,500 and a small amount of GST, which comes to 990 rupees of GST. So if you think that yes, this is a high time I should possess a academic skill in this market and I should know the market internally, how it operates and how I can plan my trade, then you can invest some amount in your education. So this is a pretty low amount, 17,500 plus 990 tax. With this, you are getting 6 printed books and 16 DVDs and all our advanced softwares, including option strategy software. So including one standard deviation trend analysis software. So all things you will be getting, and try to use it. Try to use some plannings in the trade. Try to have some good view on the market, good trend analysis in the market. These are the ways you can able to improve your trade performance. You can improve your trade success in the market. There is no other shortcut to make profit in the market. There is no other shortcut. There is absolutely no other shortcut to be successful in the market. You have only one way. Learn, equip yourself, experience certain concepts, valid concepts, then you should be profitable in the market. Yesterday also I have hosted one video on the YouTube wherein I have just recommended one best option strategy for the Nifty for the coming 10 days. This is also I have explained yesterday. So most probably many of the traders used to think that whatever the option strategy someone gives, they never try it, they never experience it. They just to promote certain products they used to give that. It is not the fact with the smart finance. It is not the fact with us. The strategy what I have recommended to you, this is my own portfolio. This strategy also I have initiated. I have initiated this strategy which is costing you 54,000 minimum margin requirement. You can, the brokers exposures is some 84,000 of margin requirement. This is the strategy yesterday I have recommended. I have also taken this strategy today. The Bank Nifty strategy what I have explained to you, this particular strategy also I have been taking from the beginning part of this thing. You can see the similar combination what I have recommended in this Excel sheet, same combination I have been taking, and this consolidation strategy what I have recommended, the first part of the strategy, this I am been doing from the past 2 weeks, and by this process also I have gained some money from this consolidation part. However, same time I have just kept the trending expectation part of the strategy is open. So this particular strategy also I have taken it. I have taken, which is daily basis the margin requirement means changes. It requires near to 1,93,000 of margin, as I have told you. So this strategy is recommended by us. It's well tested and well implemented by us. So it is not that we recommend, we never initiate that, we never experience that. It is not that. So in the coming days, I will also share these same strategies performance analysis with you to validate, yes, this strategy works and this method of trade forecast works. Till then, try to implement this strategy, experience this thing, and if you think that yes, it is the time to educate myself, then opt for our products, futures and option course. Or if you are thinking that yes, I should be a full-fledged trader and I must learn the internals of the market, then you can opt for our courses and softwares, which will cost you 17,500 plus 990 tax. Any query related to the products, you can call in these numbers any query related to this particular strategy explained, you must send one email to these things. We will be glad to answer your queries. With this, I remain. Keep following this particular strategy and share your experience. Thank you.